I went to a seminar once that talked about emotional investment decisions and some of the big mistakes that are made, and one of the big ones was overconfidence. I learned something and I wanted to test it. And I speak to a lot of audiences across the country, and over the next couple of years I probably talked to 60 or 70 audiences, and so I tested a theory. I asked in every case that I had an opportunity, how many in the group were below average drivers. I asked them to raise their hand. And what I found was that in a group of 150 people, you'd usually have one or two people raise their hand and say they were an above average driver or a below average driver. And what I realized there is, half the room is below average and half the room is above average in anything. And so in driving, about 75 people should have raised their hands if they were perfectly honest and perfectly self-aware. Well, when we relate that to investing, what we find many times, and this becomes one of the big mistakes, I know it was a mistake I made in the late 90s, is I would micromanage pieces of my portfolio, believing that somehow I was smarter than or had an edge on or a unique perspective on certain investments over, a Wall Street firm, in New York that had CFPs and CFAs and qualified analysts in 60 or 70 countries speaking 30 different languages, yet somehow I, in between my golfing and working with clients, was going to be able to do better. And so what I realized was, boy, I was actually in that group in that sense. And so when you think about overconfidence as an emotional investment decision, consider that you want to have the people that are excellent at what they do managing on a micro level your portfolio. So for example, if you're going to have apartment buildings in your portfolio and you've never bought an apartment building before, you would probably do well to defer to somebody who's bought billions of dollars in apartment buildings. Or if you're going to have small cap stocks in your portfolio, let's say small cap world stocks or small cap value stocks, that is a whole art in and of itself to identify good PE, good valuations and so forth on stocks. And there are firms that do that. What we need to identify then, to strip the emotions out of it, is which firms have good long-term records of doing that. What are their fees? How has the standard deviation been? Remember these coefficients on risks that we look at. These are ways that we strip that emotional mistake of overconfidence out of the portfolio.